Good morning, traders. How are we doing today? Hopefully everybody is doing well on this Friday. It is a bull market. It seems like everything is ripping this morning. My name is Jason Krutzky. It is a pleasure to be with you all for yet another TrendSpider office hours session. As we always do at these sessions or in these sessions, this is all about you guys. This is your chance to get any questions that you might have about TrendSpider answered. So for the next hour or so, I'm going to be hanging out. No agenda, nothing in particular that I want to look at. If you guys have things that you want to look at, we totally can do that. We can analyze some stocks. We can. Good morning, Mark. How's it going? Hope you're well, sir. What brings you here today? You're a new name. I've not seen you here before. Please, let me know what you're doing here. If you have any questions about the platform in particular, we can talk through how to utilize the platform, different tools on the platform. We can talk through some technical analysis on any tickers you might be interested in. I'm here for you guys this morning. So hit me with what you got, Mark. Where are you tuning in from? What are you trading today? And what are you interested in? And there's a few other folks here too, I see. So please say hello if you're here. Please say hello. Good morning. The thing I was looking at was crypto. Obviously, Bitcoin had a massive move over the past 24, 36 hours or so. Really impressive. Taking out those lows that brought us up. Scooping liquidity and running it back higher. But yeah, what brings you guys here today? It's Friday. It's the end of the week. It's been a big week. Are there any names that you're interested in? What can I do for you today? One thing that I was doing, one thing that I built just the other day. What's up, Atul? Should you stay in Disney? Add more or exit for now? I can't tell you that, sir. But we can look at Disney. So let's take a look at Disney. You know, whenever I'm looking at things, I always like to zoom out to get kind of the big overarching view of what's up. And something that I noticed yesterday, I actually tweeted this out. I don't know if any of you guys are interested in the Weinstein stage analysis. If you follow the IBD kind of philosophy, if you're paying attention to traders like Oliver Kell and these sorts of folks, this is something that these guys are looking for. They're not quite calling it this. They're not quite calling it Weinstein all the time, but it's essentially Weinstein stage analysis. And in Weinstein stage analysis, there are really kind of four things that happen. You have stage 1, stage 2, stage 3, stage 4. And so your stage 1 would be, and I'm looking at the weekly chart here, this is a 30-week SMA. So stage 1 is when you start kind of accumulating and going sideways and then regain that 30-week SMA. In stage 1, you're kind of looking for the pullback into it, which is kind of what they did over the course of these couple of months from November through January. And then right around middle January, they found support at that 30-week, and it's really been off to the races since. So now we're getting into this stage 2, Weinstein stage 2. And stage 2 is the part of the Weinstein model that everybody wants to be involved in. So you could see it over here too back in 2020. They regained, they came back and held, and then they extended. And so this is all of stage 2. Stage 3 is when things start going sideways. Price kind of starts, maybe loses that 30-week, but holds it for a period of time. And then you have stage 4, which is the downcline or the downturn or the decline. So we are well into now, or we're not well into, but we are in the early, what it appears to be the early stages of this Weinstein stage 2 period. And how long this will last, you know, it's very difficult to say. But obviously this is a very bullish look, although perhaps maybe a little extended from where it was just a couple of months ago. But also it's still trading well below where it was at the all-time highs. I mean, you're nearly 50% from the all-time highs. So does this thing have room to continue much higher? I would argue absolutely it does, as long as your time horizon is reasonable. You know, it's not going to get there next week. You do have, so I've got a volume by price anchored to the all-time high. And the reason why I like to do this is I want to see where where are your buyers from the all-time high? Is there a lot of overhead supply? And the reality is there really isn't. They have come in and they have actually bought these lows. You know, in some scenarios, you'll see most of the buying at the highs. Like if we jumped over to Amazon's a really good example. Just going to the all-time high. See, when we're at the all-time high, you've got the point of control, which is where the most volume at price is. You've got the point of control up here, even though the thing retraced over 50%, right? Most of the lion's share of the volume is at the very top end of the range, which is why price is struggling here, because you got people who owned it from these levels. They allowed it to go against them for this period of time, and now they're selling because prices, they're essentially back to break even. Well, in Disney, you're not seeing that. Disney looks quite different, right? From those all-time highs, all of your volume is here at the lows. So there was a lot of accumulation happening at the lows. But what you do have is you have your VWAP from the highs. So that's your volume weighted average price drawn from the highs. See it another way, it looks like this. So I just right-clicked on this candle and created a VWAP from it, but the horizontal level is lining up with that. So this $119, $120 area could be an area of interest. If you look over to the right here. Oh, that's not the right drawing tool. My bad, guys. See that low area of volume? This is one of the lowest volume areas in the entire volume profile from the highs down to the most recent lows. Is around this 124 area. These low volume nodes, as we like to call them, they can kind of do two things. They can kind of act as two things. I see them acting as very strong support and resistance. Price comes up into them or down into them and finds support or resistance kind of right at them, or price can kind of ghost right through them because there's really a volume pocket, and you can see it. There's not a ton of volume there. We can see it in this candle right here, right? It kind of aligns. You had this whoosh down and they came back in, tested it here, failed. I would guess that maybe there was an earnings report somewhere around here. We could look and see. So it was before an earnings report, didn't have anything to do with earnings. So I don't know what caused this particular move on this particular week, but big whoosh down that left a bunch of, just there wasn't a ton of volume done there. And we could zoom out, we could go back farther in the volume profile to include more price action, and then we get a different look in our volume profile. So always something to consider. Utilize multiple measurement points, because we're only taking into account from the highs. We're only taking into account all of the price action that's happened since the highs. So, but I'm not here to tell you what to do with your trade. The idea is kind of to use the tools to make an educated guess about what could happen. We know that we're now in Weinstein stage 2. Weinstein stage 2 it will stay Weinstein stage 2 until price comes back into this 30-week moving average at some point in the future and starts to consolidate around it and ultimately begins to fail. And that's when you get into 3 and then 4. But you do have this overhead resistance, potential overhead resistance from those highs, from the all-time highs, the VWAP at 119. That could be an important spot for you, where price could struggle a little bit. The basics of trend tell us that we are still technically in a downtrend, right? You have a high, you have a low, you have a lower high, you have a lower low, and potentially what you're going to get here is another lower high. If they're able to gain that high from February of last year, then that tells you, hey, the trend is now changing. We have now made a new high. if a reversal comes, when a reversal comes at some point, we need to expect a potentially higher low, because on a shorter term time frame, you also have a shorter term higher high setting up, right? You got a low, a high, a higher low, a higher high. So in the near term, we're creating a potentially new uptrend, but in the kind of longer term, we're still technically in a downtrend. So that's kind of one way that I would think about it. I would look at seasonality too. And this is kind of interesting. February, there's not a ton of information that we can glean from this. We know that the best month of the year is behind us. January is historically Disney's best month of the year over the past 50 years. If we wanted to, we could take a smaller time frame approach, and we could look at like maybe the past 10 years. How does it tend to perform historically? And over the past 10 years, we see that actually July is the strongest month of the year, but we're coming into some weakness. March tends to be pretty weak over the last decade. May tends to be pretty weak over the last decade. So, use this to help gauge. I don't know where you took this trade from. Perhaps you're in from the lows. Perhaps you just bought yesterday. Another thought too is you could look at historical gap ups. Like we have, we have 50 years of data here. So you could go into the strategy tester and you could say that earnings was within the last X days, maybe last 2 days. And you could say that the low, today's low, is greater than the high 2 candles ago, right? So we're looking for kind of like a gap up scenario. I'm going to drop down to the daily time frame here. And then, just use a candle period. Say X number of candles out. How does this thing tend to perform when you had an earnings gap up? I don't know. We're about to find out, though. So historically, this has happened, 13 times? Your win rate is 50%. So not the greatest win rate in the world. Not bad, but not the greatest. Your average return 60 days out is 0.5%. So that's kind of interesting. Let's do this. Let's take it a little bit less time. Let's say like a 20 candle period. So if we look at a 20 candle period, your win rate jumps up to 67%. Your average return jumps to 1.47. But this has only happened 13 times in the history of the stock. So, we could jump in here if we wanted to. We could zoom in to a section of this performance chart to kind of see what happened with positions that where we got into positions when this happened. And you can kind of see what price did after. You could also see it on the chart too. We had a earnings gap up last quarter, or in November. Yeah, so last quarter. So you had an earnings gap up, a peg. And this one ended up resulting in a 2.88% gain. You had one back in August of 2022 that ultimately resulted in a loss. So you've had these. We've seen this happen before. Past couple have been during pretty heavy downtrends. So they've marked tops essentially of this move lower. That doesn't mean that that's what's going to happen here, but it's just what has happened over the past handful of quarters. So what it kind of feels like is like when this thing is in an uptrend and it power gaps up, it usually turns out like a pretty decent trade. And when the thing's in a downtrend and it power gaps up, it turns out not so great. So I don't know. That doesn't really give you, I don't imagine that gives you exactly what you're looking for, but it gives you some thought on how to kind of utilize the platform to analyze it. And then as far as a stop loss, man, I mean, when I think of stop losses, I'm not going to tell you where to stop. But when I think of stop losses, what I do is I use my my position management tool, my draw position tool. So what this tool does, let's talk about really quickly what this tool does. The idea behind the position management tool is measuring R. So R is your risk. How much are you risking to make whatever you're trying to make? There are lots of schools of thought about proper R management. I'm of the school of thought that you should have 2.5 to 3 R minimum per whatever trades you take. And the reason why I think that's important is because ultimately it allows you to lose more than you win and still stay profitable. So essentially, if you're incorporating a 3-to-1 risk to reward ratio for every trade that you take, you only have to win 33% of the time in order to stay afloat, just to stay break even. Anything above a 33% win rate is going to get you positive net returns. And, you know, I don't know, everybody's got a different win rate, historical win rate for their strategies. If you don't have that identified, I would recommend maybe digging in a little bit and spending some time trying to figure that out. But the risk reward drawing tool is a very quick and easy way to determine where you need to be getting in and out of your trades to meet those R requirements that you deem for yourself. So let's just say we got in on the break, this breakout candle here. We got in on the new high. If we were to say we wanted our stop to be at the lows of this move, well, then in order to have a 3R ratio, then we need to be targeting about 126 and we need to put our stop at 88.76. And that's just that, right? It's just literally as simple as that. If you want to take this to a smaller time frame, of course, let's say you wanted to be, I don't know, maybe you want to be long. Maybe you think they're going to come down and swoop these lows, but then reverse it, and you want to get long on that particular idea. Well, then you can put your R drawing tool right here at the low. You can decide where you want your stop to be. Maybe you, I don't know, this is a very wide stop, but I don't know. Decide where you want your stop to be, measure up to get the R value that you're looking for, and you're off to the races there. Now, I know that everybody trades different ways, right? Like maybe you're utilizing moving averages, a series or a set of moving averages, and maybe you're long off one and you're targeting another one. Well, then the same idea would hold true. You could utilize that R tool. Let's say you were long off of the, this is the 50 and this is the 20, this is the 100. Let's say you're long off the 50, you're looking for the 20, and you're using the 100 as your stop. Well, then, again, there's your risk to reward drawing tool, your measurement for that idea. And you can see the R is 0.82, so it tells you instantly the trade doesn't have merit because the R just simply is not there. So, I don't know. That was maybe a long-winded tool. Maybe that was long-winded. Maybe that was more than you needed. But that's how I think about it. So I wanted to give you what I got. Jay, great to see you. Thank you for the kind words. Would you be willing to check out BKSY? Let's see. Whoa, what a move. Yeah, I mean, what is this? When you zoom out, it looks, I don't know. It looks pretty ugly when you zoom out. Certainly, perhaps, you know, this thing could have legs. I don't know. There's not, hold on, let me go back here. So it's just 3 years, 4 years worth of data. Looks like it IPO'd back in December of 2019. So not a ton of information there. We could look at seasonality real quick and we could see. Yeah, so seasonality has a 0% win rate in March. February, 60%. It's kind of like meh, whatever. No analyst participation on this name since August of last year. Let's Let's see what's up in unusual options. No unusual options data for this symbol. So let's see. What has this thing done? So this thing's up nearly 22% in just 2 days. Impressive. Let's just test and see something. I'm just going to test and see how often that happens for this name. So I'm saying price close greater than price open. 1 candle ago. And so essentially what that's going to do, in theory, it's going to theorize, even though it's not going to take the position right now. Like we won't see that we're in a position right now because the day hasn't closed. But it's going to theorize the move that is happening right now. So what I say, 22% from yesterday's open? Yeah, 21.5. So I'm saying price close today greater than price open yesterday by at least 21%. And let's just do like 5 candles past. And the reason why I'm doing this again is just to see the historical precedence for a move like this on this name. 4 times it's happened. Your win rate's 25% 5 days out. Your average return 5 days out is negative 4.47. So that's not any data. That's 4 positions. That's not very much data at all. Probably not worth giving much credence to, but whenever there are big moves like this in a stock, no matter what the stock is, if I'm even remotely interested in trading it, I'm going to do something like this. I'm going to do a test like this, not because I want to know exactly what this data is, but I just want to know, is it common for the name to have? Like, I'm not going to use this data to assume that 5 days out from now, the return's going to be negative 4.47%. That's not the assumption I'm going to make. I'm just simply looking at the data to know how common is a move like this, what's happened in the past, right? But yeah, that's kind of how I think about it. Since it's a big move for the name, this is not a common move. I'm going to look at the daily. It kind of doesn't make a ton of sense to look too much farther out than that to me. I don't know what your plan is for this trade. I don't want to make any assumptions. Looks like on the daily at least, they managed to basically hold these lows. They came in and kind of found liquidity at them, but they never closed below them or got rejected below them. They just pulled liquidity from the lows. So that's kind of bullish that they weren't ever really able to make proper new lows. They're currently gaining that anchored VWAP from the most recent high, the July 2023 highs. You don't have a ton of volume. You're coming into an area where there's just simply not a ton of volume here from the highs. And we could zoom out though. If we pull this back, then even still, you have a bit of a volume gap here in between that 150 and 170 area. I don't know. To me, this is highly speculative. So I would say, just like I was explaining with that R drawing tool, if you decide that you want to take a trade in this thing, use your R drawing tool. Like if I were to get in right now, and maybe I'm targeting somewhere up here, those old highs. Well, run my R drawing tool up to those old highs. I got to decide a stop loss. Maybe I want to stop on a new low. And what does that yield me? Well, that yields me an R of 1.43. So I'm risking $1 to make 43 cents. Is it worth it? I don't know. If you decide that it's worth it, position accordingly. Or, you could do something like this. Pull your stop up to maybe a more near-term low, perhaps, and that increases your R value. And then you position according to that. So, hard to say, Jay. Hard to say. Let me look at volume real quick. You said that it saw pretty unusual volume. So, it is big volume. But relatively speaking, let's look at it relative to kind of just the past year. So this is over a year of data. Definitely the most volume that it's seen in a like half of a year. We definitely saw that volume when we hit those highs, or it saw that volume when it hit those highs back in June of last year. You saw a lot more volume on this particular day. And really, you saw kind of historically higher volumes before June of last year, and it's been steadily on the decline. So yeah, perhaps this is an abundance of volume. 1.9 million shares. I don't know. Is that a lot of volume? Ultimately, I don't know. Yeah, Jay, right on, man. I mean, Jay, you bring up an interesting thought. As a new TrendSpider user, where are your pain points? What are you having trouble with? Because I'd love to like show you some things that could help potentially get you way more comfortable. Ion Q. So again, not a ton of data here. This thing IPO'd in January of 2021. Let's zoom out a little bit. So essentially, kind of where you're at right now, you've got the VWAP from the IPO, drawn a different way. So Jay, if you're interested in anchored VWAPs, just right click on a candle, any candle, and choose create anchored indicator and then anchored VWAP. So this to me represents kind of your line in the sand from the IPO. This is your average buyer, where your average buyer owns this stock from IPO. That's every single buyer that exists since this name has existed. And currently price is struggling just below it. If you're thinking long term, then perhaps you might want to wait for price to regain this, because this is going to be overhead supply until it isn't, right? You got a volume gap below here. We could again kind of take a look at seasonality. Looks like February, strongest month of the year. That's good to know. If we add this mean change, we can see what the mean change is historically for February. 20.62% in February. We could then do this. We could go to the monthly. And so mean change is measuring the move from the previous monthly close to the close of the current month. So right now, you're at 8.66% up on the month. Whereas historically, this thing returns a mean change of 20.62%. So history's on your side in the sense that if it were to repeat, now remember this is a cumulative and it's only 3 years of data. So how much you want to read into that? I can't tell you how much to read in that. It's only into that. It's only 3 years of data, but 3 years of data says that that February is the strongest month with a mean change of 20.6%. So if you're going to have a strong month, this would be the place, this would be the time that I would expect it. See, these mean changes are similar for other months as well. So again, 3 years of data might not be worth reading into too much. Yeah, Jay. So with R, I think it's an afterthought, I think, for a lot of people. But I don't think it should be an afterthought. I think it should be a first thought. Should always be considered. Strongly recommend you always considering your R before every single trade that you take. I think it will serve you well. Hey, Jason, TrendSpider customer from Italy. What's up, Fabio? One question. Do you think AMD still got momentum? Will 180 remain resistance that will be difficult to overcome? Hard to know. I don't like to talk in absolutes. You know, new all-time highs are not bearish, right? If we dig in here on seasonality over the last 50 years, you're coming into what is seasonally kind of the strongest time of the year, like the best win rate of the year, March and April, and then November as well. Again, this is looking back a long time. Perhaps we want to just see kind of more near term, past decade. When we look at the past decade, not quite as powerful this time of year, more powerful in the summer, or just a higher win rate in the summer. More powerful is not the right word. I'm sorry. I don't want to mislead. But yeah, when it comes into all-time highs, it's really hard to say, right? Like there's nothing to really measure. You can utilize fibs. Everybody looks at fibs different ways. Generally speaking, this is how I would do it. I would be looking from the previous high down to the low and then extending higher. So you got the 1.618 at 232.37. Could be a level of interest at some point. You could also measure from this. You know, again, different people see things different ways. So from the near-term high to the near-term low and then the extension up. Clearly getting kind of caught up here at that 2x extension. Can this thing cool off? Should it cool off? Maybe. I don't know. You could, if you wanted, you could kind of see this thing's gained 75%, 76% in just 4 months' time. How often does that happen? Good look. Do like, I don't know, 12 a year out, maybe. So it's happened before 19 times in history with a really high win rate, 74%, with an average return of 26.78% after a move like that. So not uncommon. Looks like it did take an entry. Looks like over this period of time, we gained 75% too. So it is in a position right now, actually. And according to the position that it's in, thing is up 52% already, which quite trumps the average return of a common position. Yeah, I don't know. Very hard to say. I don't like to, again, Fabio, it's hard for me to speak in absolutes, especially at all-time highs. I can tell you for sure, I don't short an all-time high. Instead, I would be looking for where it makes sense to be trying long positions per whatever my R is. So I'm sorry I can't be more, I don't know, can't like dig in better on you with that. Can't dig in on that with you better. Yeah, that's the English way to say those words. VWAP, yes, that is an anchored indicator, correct. Yeah, and so you can right click and create it. Or you can come in here in your indicators, click on the 3 dots and type in a VWAP, and it'll be there too. And so the difference between the right click ad and this is the right click ad, you're putting it wherever you see it, wherever you want to put it. Whereas the auto anchor, which is what this indicator is, it will anchor to a particular candle that you define. But it's like a type of candle. So it's the highest volume candle or the highest high or the lowest low or day to date, week to date, month to date, quarter to date, year to date. And so all of these to date candles, if I chose week to date and said apply, and I put this on the 4-hour time frame, it's going to anchor to the top of the week, right? If I go down to the hourly, again, it's anchoring to the top of the week. 30-minute, it's anchoring to the opening on Monday. And when today closes and next Monday opens, this will jump to the next week to date. So I'm going back to this. So think that through, right? Day to date is just your standard VWAP. That's all it is. It's just a basic VWAP. Every single day it resets. Week to date, it resets every week. Month to date resets once a month. Quarter to date, once a quarter. Year to date, once a year. But then these up here, the highest volume, the highest high, the lowest low, the blue raindrop, the recent gap. How do you define highest high, right? It's not just the highest high on the chart, period, because it's going to be relevant to your time frame, or it's going to depend on your time frame. The highest high and the lowest low and the highest volume and the blue raindrop and the recent gap, they are all related to the window period. Why is this playing this song? Hold on, I got to change this. The window period defines the amount of candles around the highest high that make it so. In order for a candle to be the highest high, there have to be candles surrounding it that don't have a higher high, right? So if you have a 40 candle window, it's going to anchor to the candle, the highest high candle that has 20 candles to the right and 20 candles to the left that don't have a higher high. That's what that's all about. So if I were to switch this to, let's say, 10 candle window, what that's saying is the highest high that has 5 candles to the right, 5 candles to the left that don't have a higher high. And that's why it's moved it to this one, because there's 5 to the right, 5 to the left that don't have a higher high. Now in 4 candles time, we get 1, 2, 3, 4 more candles. It's going to jump to this candle right here because this is the highest high candle with 5 on either side. Unless it makes a new high. Then again, the calculations are going to wait until it's right. But it's important to understand. I just wanted to make sure you understand what the window period means. Selecting recent IPO tickers with less data. So something like DXY would have it. When you say selecting recent IPO tickers, Jay, are you saying you're looking for recent IPO tickers? Or are you saying you're having trouble utilizing the charts of them? What is the actual issue there? You mean my lack of data is just because I choose to see tickers with less years? Got it. Yeah, I mean, that's how it works, right? If they IPO'd recently, there's not going to be a lot of data. So then it can be difficult to make, what might be considered informed decisions. Right. I mean, I think you just have to keep it all in perspective. Right? There are young companies out there, I'm sure, and I can't pinpoint one, but there are young companies out there that don't have a ton of data, that are getting news, that have had news very recently, that are going to profoundly impact the long-term reality of that stock. You just have what you have about them. And it all comes down to position management at that point, right? Like, decide where you're wrong. Use whatever you want to use to decide where you're wrong. Is VWAP useful for DXY? That's a good question. Now, honestly, DXY is not a product that's available on the platform. That is the dollar index. We have the UUP, which is the ETF version of the dollar index. So actually, I'm not completely certain. Since we don't have it, I'm not certain if volume data is available in the dollar. I mean, it seems like it would make sense that it would be, but since it's an index, I'm actually not certain. Because let me see something. Okay, so 10-year Treasury is the 10-year Treasury index, and there's volume data for it. These are just volume profiles of the session, per session volume by price. So there's a volume profile, but it doesn't offer anchored. Huh, okay. Yeah, so this is getting into a world that I'm not super familiar with, but let me see. I kind of want to say, I kind of want to say that there's not volume data. Oops. Yeah, so no volume data on an index. Like on SPX here, no volume data. So I guess not. Yeah, what indicators are useful for UUP DXY? It's a good question. I think that anything that you would use is pretty relevant. Oh, here we go. So there is volume data. I'm a little confused by this. I'll have to ask about this. I mean, it makes sense that there's volume data on. Yeah. It makes sense that there's volume data on UUP. My question, though, is with UUP, is UUP a good product to use to analyze DXY? And I would honestly argue that it's not, because it's an ETF and it's not built the same. It doesn't look like, the chart doesn't look the same as the DXY chart. I'm not going to jump over to a DXY chart. Well, hold on. So here's what I mean. So I'm just switching this. Give me one sec. It will make sense momentarily. Just want to see. All right. So here's the DXY chart per market watch. And normally I don't do this, but here's the DXY chart per market watch. And you can kind of see where the lows are. We put in a higher low back in whenever this was. End of December, early January. Yeah, end of December, December 27th. Higher low relative to the lows in July. Whereas in UUP, you made a low in July, made a lower low in December. Like, that alone to me makes it like, how do I use UUP to analyze DXY? It's hard to, for me, it's hard. Like, if I'm analyzing DXY, I want to analyze DXY, and these charts just simply do not look the same. The UUP ETF is just, it's built differently. It's not a 1-for-1 correlation of DXY. And so that would make it hard for me personally if I were trading UUP, or if I were trading DXY, it would be hard for me to look at UUP. Now, if I'm trading UUP and I'm not thinking about DXY, I guess what I'm saying is I would have to separate the analysis. If I'm trading DXY specifically, then I would be looking at the DXY chart. If I'm trading UUP specifically, then I'd be looking at the UUP chart. I'm not going to look at UUP to trade DXY. I'm not going to look at DXY to trade UUP. Hopefully that makes sense. And, you know, I wish that we offered DXY. It would be awesome if we had it. And maybe one of these days we will add it. But until that time, what we have is DXY or UUP. And so I would be kind of thinking about if I'm trading it, I would just be trading it. But they had some sort of restructuring. I don't know if they I don't know exactly why this gapped down the way that it did back in December. But I want to say that they had some sort of restructuring of the ETF itself. Maybe they did like a reverse split, or I don't know. You'll see this happen on, like, you know, UVXY, like those sorts of products. See, again, though, this is again what I'm talking about. Like, I don't know. I would need to understand why this big gap down happened. If they just restructured the product, or if the dollar actually did something here that caused this. And I kind of don't think the dollar did something that caused this. So it's, I hate to say it, but to me, this is kind of like fundamentally broken. If I'm just analyzing, though, yeah, I mean, I don't know. It's hard because I don't really mess with the dollar too much. Like, the thing that I do with the dollar is I just kind of keep an eye on it to get a general feeling of, should stocks be strong? Should stocks be weak? The historical precedents, or not historical precedents, for some time now, it's kind of, they've had a relationship that was inverse, right? When the dollar's strong, stocks tend to be relatively weak. But now we're seeing that be not true, right? Right now, the dollar is strong and stocks are strong, which is kind of a little bit of a change of pace. Or at least the indexes are strong. You know, that gets us into a conversation about market breadth. You guys have probably been hearing people talking about market breadth for a little while. We were talking about it in the most recent weekend update. How we're seeing, I'm going to add it really quick just so that y'all can see it. We're seeing lower highs in the, we're seeing a deterioration of that 52-week highs list across all of the big indexes. Russell 2000, NYSE, NMS, Composite. They're all kind of showing us the same thing. I'm not sure why this is having trouble loading. Maybe. So it seems like maybe there's something up here. We don't know what it is. There it is. So you've got this breadth divergence where there are less and less names making new 52-week highs as the SPY is just absolutely ripping. The options indicator? Oh, okay. Gotcha. Well, also, Jay, you know, these streams stay up, right? They're available on the channel, so they're always around. And, you know, we try and give a lesson pretty much every time I'm live. And I never really know what I'm going to be doing, right? You guys are just hitting me with your questions. So feel free to jam around on some of the other ones as well, because there's usually something to learn in everything, in every live stream. There's usually some lesson that comes along. SPY about to hit $500. Holy guacamole. So, with that, guys, any other questions? I usually go for about an hour, so we're getting up into that hour period. Speaking about SPY, retest 460. I mean, who knows, man? Who knows? At some point, you would think, but when? It's really hard to know. It's really hard to know until they start making, you know, it's pretty basic stuff, right? Until they start making lower highs and lower lows, this thing is just screaming higher. So it's hard to say. If you're looking for that 460 retest, I mean, that's a big move, right? That's a $40 move lower. It certainly could happen. It certainly could be a really great level of support. Would not shock me at all to see that come in and act as support at some point. But to assume it's going to happen today, or to make any assumptions about when it's going to happen is really, really difficult. And so I'm not going to do that. What I would tell you though is, you know, if you're looking for something like that to happen, watch price action, because price action is going to tell you kind of everything you need to know. It's going to make the moves for you long before price gets to that spot. And essentially all you have right now is a series of higher highs and higher lows. So maybe identify a very important low on the chart, perhaps this one. This could take time, right? You know, let's just, and I'm not saying it's going to happen, but let's just say something like this comes along. Say at some point they reject and they go and they make a new low. Well, price could still come all the way back up to the highs and retest them. This is just kind of how trend works. And then maybe if it fails there, then maybe you get another new low and it takes out another important low on the chart. Right? Maybe down here somewhere. Or even down here. I guess what my point is you got to wait, in my opinion, you know, do what you want, but the way that I see things is you got to wait for confirmation. And so your potential confirmation is here. Right? That they've actually made a new low. Once they've made a new low, then that sets up some idea of, well, you know, if they go and they try and make a new high, they might not be able to do it. And this is where risk to reward comes into play, because if they make a new low and then they come back at some point, they come back and they test the old highs and they're unable to do anything here. They're unable to actually go and make a new high. This is why risk to reward is important to me, because this is where I start thinking about it, right? If I wait for them to tell me, if I wait for the market to tell me, all right, a new important low has been made, that's a big deal. So I want to be trying to take shorts when price retests a previous high with the expectation of that trend having changed, lower lows lead to lower highs. And so if my entry is somewhere up in here, I have a very clear stop, which is just above a previous high. And then I have a very clear target, which is a new low relative to the low that was made. And then I can quickly and easily determine, based off of this idea, does it make sense for me to take this trade with the R that is presented? And so a 4.5 R trade is a very healthy, to me, a very healthy R value to be after. I know that I'm wrong really quickly. And if I'm right and they do make the new low, then I have that asymmetrical return that I'm looking for. But to assume that this is the top today, or to assume, that 460 is coming, it to me, it would lead to like just jumping into a trade, and I just can't do that. I always have to sit and on my hands. Jay, I do not stream daily. I'm usually at it like 2 or 3 times a week. I try to go live during fun market events like Apple earnings and Jerome Powell live press conferences and these sorts of things. And then I go a couple, depending on what's happening during the week, I'll go live like once or twice around this time, kind of in the morning. So it really just kind of depends. But I try to be live a couple times a week, no matter what, whether there's something important going on in the market, if there's nothing important going on in the market, just to be here as a voice and a face of TrendSpider to help answer questions like what you've had today. So what I would recommend is, if you're interested in kind of being a part of these in the future, just subscribe to the channel and then turn on notifications for the channel as well. That way you'll know when I am live. Yeah, Jay, absolutely, man. No problem. I'm really glad to answer questions. Seems like every time I go live, there's at least one person like yourself who has a bunch of questions. That's what I'm here for. I'm here to help get you guys more acclimated and acquainted with the platform so that you can feel comfortable doing all this stuff on your own. The platform is wildly powerful and wildly useful. And there are, like you said, there are a ton of tools on it. And so I understand how it can feel a little like a lot. So that's really why I'm here, is to kind of help you feel a little bit more comfortable and help get you up to speed so that you don't feel like it's a lot. You feel like it's a tool that's working for you, as opposed to you kind of struggling to figure out how to work with it. So with that, y'all, I guess I'm going to get on out of here. This has been a fun session. Jay, I do appreciate all your questions. Fabio, appreciate your questions as well. Atul, great to have you here. Mark as well. It's been a pleasure, guys. If you guys need me, you can follow me right here. That is my Twitter handle, @KrutzkyTrades. If you have trouble on the platform, need some help with something, my DMs are open. You're welcome to reach out to me, and I'm happy to help however I can. I will be back again next week. I don't have any set times in mind, but I will be back again next week. I think, actually, there is a big project that I might get called to work on. So these actually may pause for just a moment, Jay. I don't know if that's going to happen, though. I'll find out soon. And if that happens, I'll make a tweet and let you guys know that I might go MIA for a week or two. But otherwise, do plan on me being back here next week for more office hour sessions. Again, it's been a pleasure hanging out with y'all. If you need anything, hit me up. Until then, have a great rest of your trading day. Have a great long week, or it's not a long weekend, just a regular weekend. Have a great weekend. And thank you for being here today, and we'll see you next time. All right, guys, take care.